Okay guys, today I'm going to share with you my exact strategy that I not only used in the 2018 and 2021 bull market, but that I'm currently using as well to make the maximum amount of profits with swing trades. It involves very high leverages, but using these without any risk. And I know this might sound a little bit crazy, but I promise you this is possible, at least with trading crypto futures in the traditional trading space. This is actually not possible, which makes it all the more interesting, especially because Bitcoin has such extreme volatile swings where this strategy really comes into play. The people that are following me for many years on my German channel already know what this strategy is. I mean, this strategy I also used to have some of the biggest live trades ever recorded on YouTube in the last bull market. For example, my $20 million long position on Bitcoin that we later scaled up all the way to $30 million live in stream with over 1.5 million in unrealized profits. So I can promise you I've used this strategy a lot, and a lot of my followers on my German channel already know what I'm talking about. But I think it is time to make a video here also for the English community so everyone can finally understand how to manage these swings in the cryptocurrency market properly and how to use leverage without risking so much capital, and especially using leverage without turning trading into gambling, which is highly important if you actually want to be profitable in the long term. For this video, I actually already have prepared 2 live trades, because this strategy can not only be used on trades that are in a profit already. No, this can actually also be used to rescue a trade that is currently in a loss and turn it into a big profit, especially in bull market times. So be aware of this, that this can not only be used for trades that are in a profit, but also for trades in a loss. And that's why I have 2 positions here open to explain to you exactly how this works. I mean, step number 1 to use this strategy for sure is to have a proper cryptocurrency exchange account. I have 3 exchanges that I can highly recommend you depending on your current level of trading experience. Levex is the most easiest to use, so for all beginners I would highly recommend to use Levex. I've put a link into the video description down below. You can support me by signing up with that link. On top of that, you will get a very nice big welcome bonus, so you can do your first trades for free, and on top of that you have 20% reduced fees. This is the highest fee discount that you can get anywhere in the market with a link, and you're not only supporting me by that, I'm giving back big time to you guys as well. And reduced fees will make you more profitable, as you already know. Especially with this strategy, your position sizes will get quite large. For everyone else that is already experienced, I can highly recommend BitGet or BitUnix. These are 2 of the biggest and most liquid exchanges out there currently. If you want to use them, I also organize 20% reduced fees on both of them. So I highly appreciate everyone that is using the links in the video description down below. This allows me to make all of this content completely for free. And for sure, guys, I have one option for you, BitGet, where you will need to do a KYC, so you will need to upload your passport and identification documents. On BitUnix, you won't need to do that, so just choose the option that is for you. If you already have experience, BitUnix or BitGet, depending on if you want to do KYC or not. If you have no experience to low experience, I would recommend to use Levex. As soon as you are signed up and have made a crypto deposit or bought crypto with fiat currency like euro or US dollars, you just go to futures. It is all the same on all of these 3 exchanges. You navigate to futures, you go to USDT perpetuals. These are futures contracts that are never running out, so you never have a maturity date where the position is forced to get closed down. This is why this strategy also only works in the cryptocurrency space, because you have these perpetual futures that you can leave open for years theoretically, where this strategy comes into play for an entire bull market with swing trades, but also on the smaller time frames. This strategy can be used for immediate breakouts or breakdowns, depending in what direction your trade decision is made in the first place. As soon as you navigated to your desired trading pair, you just click on transfer, and if you have deposited, for example, USDT now to your spot wallet, you just put the amount that you want to transfer to your futures account, and then this balance will be available, shown here for your next upcoming trade. As a small example, if I'm now expecting the price to, for example, continue to the upside, I just select my leverage over here. I would highly recommend you to not use leverages above 10x for opening the initial position. The use of the high leverages will come into play at a later stage when the trade is already in a profit, or when the trade is actually already in a controlled loss. So what you are going to do is, for example, choose a 3x, a 5x leverage, a leverage that you feel comfortable with and that makes sure that your liquidation price is very far from the current price, because cryptocurrencies are very volatile assets, and if you are using a too high leverage, you will get stopped out very quickly and you will end up just losing the money that you wanted to lose depending on your risk management, but you will not be able to get into play of the strategy and using the high leverages without risk for your advantage. So for example, you can just go here, then you can do it by order by cost, so you know exactly how much money you are spending. And if I'm now spending, for example, $10,000 with a 5x leverage, I would open up a $50,000 long trade on Ethereum. This means that normally if I have $10,000 and I would buy Ethereum on the spot market and Ethereum goes up by 50%, I would make $5,000 in profit because I'm using a 5x leverage, and my trade would now be $50,000 in size. If Ethereum pumps by 50%, I would actually make $25,000 in a profit. So I would pretty much the leverage make 5 times the amount of profit that I would normally make if I would buy the asset spot. So if you just open the position, you just choose market over here, that your trade immediately gets into the market. You can just click confirm and boom, your trade will be opened. This is now pretty irrelevant as this trade is not in a profit yet. This strategy only comes into play if you already have a profitable trade, and that's why I have also prepared these 2 positions here on Bitcoin. So let's close out this position here once again. This is not really relevant to us. We want to use the strategy, and as I said, this comes into play when the trade is already in a profit. So let's say you decided, and for sure I will also show you how to use this strategy if a trade is in a loss and how to save a potential losing trade actually in this volatile crypto market. If you are now in a profit, let's say we have here, for example, a $200,000 long trade. It is an unrealized profit of $15,000, and my entry price is at the $87,000 level because we broke out of these highs here. We broke above them, so we speculated on the fact that Bitcoin will pump higher, especially also because the traditional market was looking pretty bullish. And it doesn't really matter why you are opening a position and in which direction for this strategy. If you are a news-based trader and you're trading news, this can work very well. If you are a chart-based trader, this can work very well. But keep in mind that this is definitely not something you can properly use on the 5-minute time frame, 50-minute time frame. This is definitely a strategy for trades that you want to keep open for at least 2 to 3 days to really be able to use this strategy. Because what we can do here is that if we are now in a profit with a trade, for example, with this long position, we can add a stop loss to our position. The stop loss is an automatic closing order for our trade. So as soon as the price reaches the stop loss price, for example, we can select here by price, if the stop loss price is reached, our trade will immediately get closed. Right? So this is normally used to reduce your risk. Normally you place your stop loss, for example, below a very high volume traded area if you are opening a trade above, because you expect this support to be held and you don't expect that the price will breach this support level to the downside. And if it does, you know that the market will start correcting even more and you don't want to be exposed into this position anymore, so you can use the stop loss. In our example now, where the trade is already in a profit, we can actually put our stop loss price in a profit. So let's take a look. Our entry price is at the $87,400 level approximately. So if we are now putting our stop loss at the $87,500 level, you can already see that if this price is now reached again, the trade would automatically be closed with a $300 profit. So as soon as we have placed this order now into the market, here's our stop loss order, right? We will not be able to lose any money on this trade anymore. I can also move this up a little bit if I want to move my stop loss up, for example, boom. And what we now can do is actually increase our leverage for our long position, because as you can see right now, I am in the need of $30,000 to maintain my $200,000 position with a 7x leverage. And you can see I only have $10,000 available on my current account balance for a new trade. What I can now do is I can put this leverage up to, for example, a 50x leverage, and you will already see that the required margin for my trade immediately went down to a tenth of what it was before, to $4,000, and we suddenly have $25,000 more, to be exact, now $35,000 available again for trading. And as I have my stop loss in a profit, even though I'm using this high leverage, if my stop loss is now being hit, you can already see we are realizing an additional $4,000 in a profit. And what can we use this capital for? And this is how I actually managed to scale up multi-million-dollar positions in a bull market, sometimes only from trades that were in the beginning a couple $100,000 big. And yes, you can scale up a trade that is a couple $1,000 big, potentially to a couple $100,000 without risking any additional capital. And this is where the strategy really becomes interesting. Because if we now have this trade open and it is already in a profit, and we can, for example, see that we have, in this case, we really pumped to the upside very hard, but let's say we are forming some sort of continuation pattern now here. We can expect that the market, this is only an example, but we can expect that the market would now actually continue to go to the upside. What we can do now, and now it gets very interesting, is we can re-enter the market. And this again is only something that is possible in cryptocurrencies. We can re-enter the market. Let's say my trade is currently, we want to order by value this time. Let's say my trade currently is $200,000 in size. And I know that the market will now continue to the upside, and I don't expect the price to actually go above or below, sorry, in this scenario with the long position, below the $92,000 level. What I can do now is just go ahead, order a total of $200,000 again, because now, as you guys also know, we have $35,000 in available margin again. A $200,000 trade order will now, with the 50x leverage, only cost us $4,000. So if we jump now into a new long position, you will see that there will not be a second trade opened. No, we will actually move our average entry for our already open position to the upside. As you can see now, I now have a $400,000 trade with an entry at $90,000. What can I do now? I take my stop loss, move the stop loss above my entry. And boom, now we have a $400,000 trade without any risk. We can actually use this strategy, especially in very aggressive bull runs, to double our position again and again and again, and only take the final amount of movement that the price does when it's peaking out to actually make profits that are a lot higher than we could ever make even using a leverage already, not to be talking about buying the asset spot only. And as you know, this really is exponential. So each time you double, your next double will get more significant and will boost your position to an even higher and more aggressive level. Keep in mind that you should not overdo this. I highly recommend to try to scale up in the beginning of a breakout. As you remember, our initial opening was here. So if we see that the price is really moving up aggressively, it is a lot more efficient to scale up in the very beginning of the trade, because each double will then only move your average entry price by a very small amount, right? And if the market then really pushes to the upside, you will already be in a big trade. And if the market then shows sign of continuation and you double again, this is really where things get interesting. This is also what I did in my live streams on my German channel back in the day. I really scaled these trades up in the beginning after opening to already be exposed with a relatively large position with a high leverage with the stop loss in a profit where I cannot lose anymore. And if then the bull run really started to continue and pick up in speed, I maybe doubled the trade 1 or 2 times at a maximum, but at that time I was then already at these high amounts of position size. Keep in mind that I also opened these positions with a lot of my own capital. I mean, as you can see here for this trade, for example, my position margin was $1.8 million or 30 BTC. So, I mean, you need to keep in mind that you need to look at these things in relation to your total trading capital. But just to continue this example, it's just an example trade. For me personally, I would not double this trade now again, as then my trade would move too close to the current price and the risk of it getting stopped out would be too high. But just for the sake of this tutorial, we could now easily oops, this was a little bit much. We could now easily open another $400,000 in position size. It would cost us $8,000. We have more than enough margin to do so because we were able to increase our leverage by so much. And boom, you can see our average price moves up again. We can keep our stop loss in a profit. We are not risking to lose any margin. And this is now how a $200,000 trade suddenly became an $800,000 trade without us risking anything, actually, at the end of the day. And I mean, you can play this till the point where you really have very big positions. But as I said, it is not so smart to do this when the price already moved up a lot, because a small correction is always possible, and then the likelihood of the trade being stopped out is relatively high. So try to do this more in the beginning, in the build-up of the position, and then only use this strategy maybe 1 or 2 times if we are really in a very strong run. And make sure to also take some profits always, because now if I would take $600,000 worth of profits, I will show you this in a second as well, I can actually now take profits already while I still would have a much more large position than I would originally have at $200,000. If my position would now be $200,000 and I would want to take some profits, I would need to close out, for example, $100,000, and boom, my position would be only half of the size. If we now close out $100,000, $200,000, then the position still remains quite high. This will not increase the profit you are taking, but at the end of the day, you can more comfortably, after taking profits, continue, for example, scaling up your trade. So just to make the example a little bit more clear how quickly this then really goes, if I now open another $800,000 of position size, I mean, now it is definitely very risky. I would not do this in a real scenario, but just to show here for this tutorial, as you can see now, we still have zero amount of risk. My stop loss in a profit, if this stop loss would hit, we would still make $3,000 in additional profits. But now my trade turned from a $200,000 position into a $1.6 million long position. I mean, just imagine if the price now continues to move up another 10%. Normally I would have made $20,000 in profit. Now I would actually make $160,000 in profit, and this is only possible in crypto as the crypto market moves so volatile. You can use the same strategy if you are going short. You can also scale up your short trade. And this is also why you should definitely make use of the links in the video description down below, because now you have a position that is very, very large, and reducing your fees by 20% will be very, very useful for your overall profitability, and you are supporting me by that, so thank you very much. Now let's talk about the scenario, and I will close this long position now just to take here the profits as it's just an example trade. Now let's talk about a scenario where a trade is in a loss. How can we use this strategy to actually enhance the probability of this trade turning into a profit? And it is pretty simple, because as you just saw, we can move up our average entry price to the upside, right? And let's say my stop loss for this trade would be now normally at, let's say, yeah, whatever it may be, $69,500. You can see that there's not much room to the upside here. So even if I would open up a new short position, I would not lose out on a lot more money than I'm already losing. Yeah, I'm in a losing trade. My stop loss is about to be hit. It is not far from the current price. What I can do now is the exact same thing, just in the opposite direction. I can actually scale up this short position now as an example, right? I can scale up this short position now by, for example, $300,000. And what you will see here is that, especially if my stop loss is already close to being hit, right? I cannot lose a lot more. If I'm opening now a $300,000 trade at this area over here, the loss that I'm making with this small price difference is not as big. But I have a very low chance that the price would hit, for example, my entry again, and I could exit this trade in a profit. What I can do now is I can scale up this position. I can open additional volume for the short trade, because I know with this new $300,000 trade, as it's very close to my original exit anyways already, I will not lose a lot of money. But my entry price moves up aggressively or down, depending on if you are in a long or short position that is currently in a loss. And what will happen then is that the likelihood, especially in the volatile cryptocurrency market, and this is how I saved some trades that were in a massive amount of loss that I would have never been able to close in a profit once again, right? I would never been able, because in a bull market, for example, or in a very strong correction, the price would have never reached my entry price again normally. But Bitcoin swings very hard, and we always have rebounds and we always have corrections. So you can use this actually, if the price is anyways about to go to your stop loss, to actually increase your position size and move your average entry price a lot closer to the current price. So this is more or less a strategy of doubling down, but you are not doubling down on your loss, because you are now entering the final amount of the position much closer to your stop loss. You are doubling down on the chance of this trade turning into a profit, but you are not doubling down of the risk of money you are taking. So this is a very nice strategy you can use as well to make sure that you can actually close your trades in a profit. And here the same is, if now my average entry price moves up to $90,000, right? My liquidation price also moves up the same amount. So this now makes it possible that I can also scale up my leverage for the short position without my liquidation price going below my stop loss, right? And then again, I have more capital available to actually jump into this trade. I mean, this is just an example now. To be honest, we are a little bit too far away here from my stop loss in this example to do it, but I want to show you in this example video. So we can then double it again. And now normally if the stop loss would be very close to my current, to the current market price, I would probably risk $2,000–$3,000 more than I would have originally risked. But if the price is actually reversing, I have a very, very decent chance now. Let's think about it. My original entry price was at $83,000. Now my entry price is at $92,000. So the chances of the price wicking below this level for a short amount of time are a lot higher now once again. And at the same time, I'm not risking all too much more capital to actually move my entry to the upside. But to be honest, this strategy is something where you need to be extremely careful. With the long strategy, you are not in a loss. You cannot lose anything. You are guaranteed to make a profit on the trade. So there you can go much more aggressive in the beginning, for example, of the trade going into the wrong direction. Doing this strategy with the short position, you need to do at the very, very end. You cannot, when the trade is going into a loss, start scaling up the short and trying to pull your entry with it. This doesn't make any sense. This you can really only do as soon as the market has properly moved into the wrong direction and the price is already extremely near to your stop loss, where you know you would close this trade anyways. Your original market thesis got invalidated, yeah, your original trade plan failed, and then you can risk this additional $1,000–$3,000. You can think about this in your back of your mind already when opening the trade to keep this money on the sidelines that you want to risk right before your stop loss is reached, so you can then make sure that your average entry moves to the upside and you have a higher likelihood of turning that trade into a profit. But yes, these are the two examples, guys. Now make sure when using it that you are not over scaling. As said, for the short strategy, if you want to save a trade from a loss, do it at the very end, right before your stop loss is hit, if you even do it. And with the long strategy, try to scale up more in the beginning and then get slower and slower with the scale ups the more your trade moves into the right direction, because at a certain point you also want to start taking profits, and you don't want to be exposed to the risk that the next small correction is immediately stopping your trade out again, because although you will make a few $1,000s with each trade, you will not be able to really reach these very large amounts of profits and these very big amount of swing trades if you are overscaling your position. But this is the strategy how to use the leverage properly actually in the cryptocurrency market. It is not appropriate to use these high leverages to actually open the positions in the first place. So make sure you only use the leverage functionality wisely and for strategies exactly like this that are only possible in volatile markets and only possible if you can actually move your average entry of a position, which is also not possible in the normal Forex trading space and so on. So this is really something you can only use in cryptocurrency. And as said, use Levex. If you are a beginner, it's the most simple exchange to use. You don't need to conduct KYC. With the link in the video description down below, you get nice bonuses and you get 20% reduced fees. You are supporting me by that. I appreciate that highly. This is how I am providing all my information, all my strategies completely for free. It's the exact same I'm doing on my German channel since the year 2017 already. I mean, if you guys are sometimes asking a question, for how long are you already doing this? I'm trading Bitcoin actively since 8 years now. So this is really one thing that I learned in a lot of losses in the very beginning when I first started trading. I really have to say, using the leverage in a proper way is one of the most important things, and this is exactly how you do it. So thank you very much for your support. If you are a bigger trader that is trading high volumes, I highly recommend to you BitUnix and BitGet. The link to both of these are in the video description down below. Keep in mind that on BitGet you will need to do a KYC. On BitUnix you will not need to do a KYC, but BitGet definitely has a lot more functionality. So it just depends on what you are looking for. For this strategy, all of these exchanges work perfectly fine. The only benefit is that on BitGet you even have 125x leverage, so you even have a little bit more room to play with when scaling up theoretically if you are trading with smaller amounts. But now guys, thank you very much for watching. Make sure you subscribe and activate the bell, and we are going to see us in the very next tutorial of my tutorial series on how to trade Bitcoin profitably. Before I forget it, if you are signed up with my link on any of these platforms, you can actually go to the video description down below to cryptotradeshub.com and join it. You can get some free indicators there. You have a massive amount of free video tutorials there, especially for beginners. This is highly relevant, and there's also a Discord and some leaderboard prizes you can access if you are a more experienced trader, to share your experience with others, to learn from others, and to get additional rewards. Everything completely for free. As you guys know, I'm giving back to everyone that is supporting me, because this will just support the people out there to be more profitable, especially if they're saving fees or they're getting additional cash margin every month, right, for being a supporter of the channel. So thank you very much for that. Make sure you make use of this, and keep in mind it's only possible if you are a supporter of the channel and you are signed up with one of the links in the video description down below. But as you get the biggest fee discount anyways, it doesn't really make sense to waste this, as you are just paying a lot less and you are supporting me for free, which I think is an amazing thing. We are going to see us. Thank you for watching. Bye bye.